Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all. Slightly late as promised, but it was due to some technical issues, and I could not rectify this. I'm having problem with the lighting issues here. The equipment itself is not working, but I wanted to do the session anyhow because I wanted to discuss two, three major points about this market, which has now broken probably very strong supports. And as we discussed earlier, we could be headed towards those levels as we discussed. So we'll discuss about that, and I'll answer your queries as well. Baljit, hi. SP, hi. Hello, Ceramic. Thanks for your support on YouTube. And thanks for everyone for supporting on Patreon as well. Deep, a very good afternoon to you. I'll discuss about specific stocks, answer your queries later on in this session as well. Namaste, Vishal. Hi there, Mr. Pawar. Mr. Rawat, hi. Vishal, namaste. Majorly what is happening in this market is that we are seeing lower levels as we go along, and things are not looking that great. Things might look bad for the next 6 months uh, as well. But I am talking of valuations with respect to FY24 numbers, not even FY23. The reason for that is that the way FIIs have exited over the last 2 months, and not talking of the last 14 months, but the last 2 months, it seems like that the pain will be there for at least the next 6 months in this market. So, as you said, Baljit, that though the valuations are becoming cheaper, but funds are also over for fresh investment. I agree with that. Even, well, if you ask me, I am fully invested, and I am invested on the same stocks as I was invested 2 months back, and I don't have money to add. So, absolutely correct, Baljit. But the point is not about whether you can average here or not. The point is about whether you can see the red in your screen, or how long can you see that. So basically, that is what I'm going to talk about, and I'm going to give you a picture of the kind of valuations we are sitting on for the moment. If you look at FY24 earnings for a specific stock that I'm holding, and you can probably analyze that for your own stocks going forward as to what you feel about them. So we'll discuss about that. But first, just a little bit about the markets. So for the next 2 3 minutes, I want to just discuss about the stock market per se, which was doing well. So what happened in US yesterday was that there has been a 75 basis points rate hike, and that was pretty inevitable with the kind of situations we were looking at. But then after that, we saw a decent rally in the US markets, and eventually they settled down pretty nicely in the green. But what we are seeing right now is a complete capitulation of the market here in India, and I will not be surprised if we see 14,000 on the index. That would correspond to another 10 15%, 15% gone on our, you can say, portfolio. That is not ruled out, 15 to 20%. So if I am down, for example, I can openly say here that I am down around 30%, 32% on my portfolio. I could very well go down 50% on my portfolio. But what I want to explain here is that the situation is not, I'm not saying that we are in the cusp of making a bottom and a reversal like we did in 2020. But what we are going to see is that further selling in mid caps, but even more selling in large caps. I think large caps will fall more now for the next 10% in the Nifty, and mid caps might not fall that much apart from one or two stocks. So what we'll see is we'll go to 15,000, 14,900. There we could see some buying, but eventual targets for the Nifty comes out to be around 13,800, 14,000, and that would correspond to, if we take an earnings of around 850 rupees for FY23, it came out to be 800 rupees this time around. Then we are looking at a situation where the market would be trading at just over 16 times, 16, 16 and a half times. Now, that is extremely cheap considering the earnings would be around 12 to 15%. So around 16 times earnings, 16.3, 16.4, around 14,000, 13,800 is where I see this market probably bottoming out or showing some signs of bottoming out. It's not very far off. It's about you can say 2,000 points, about 15% from where we are at. But the way it has broken 15,700 and sliced through it, now 13,800, 14,000 is a matter of time. It is not a matter that okay whether it will come or not, and hopefully it should come early. Why I am saying this is that once the poison is out early, then we will see a consistent up move in our portfolio. So hopefully in next 1 to 3 months we'll see a scenario where this market should bottom out maximum by September, and a move will begin. Now that move could take us all the way to December of next year for our mid caps which are doing well to make money. Yes, by January, February, we could be in with a striking distance of our buy price, because the reversal will be decent from those 14,000 levels. But after that, for 1 year, if we can hold on to our stocks, then the main money will be made. So 2023 should be good. 2022 till December and January will not be that great. You will be only able to recover uh, most of your losses and hopefully get to events by January, and that too in stocks which are growing at 25-30% on the profit front. Otherwise you will be in deeper trouble going forward. So kindly take that on note, and I would believe that okay 14,000 is some way some level where FIIs should come back. I mean, they have been selling relentlessly from 18 and a half thousand. They are selling at 16,000. I think around 14,000, the valuations should become very interesting. Now, the point here is not about averaging, as Baljit pointed out, that at least 90% of us or 70-80% of us don't have the money to buy. It's completely gone. That is the nature of this beast. That is how this market behaves. So, what you need to do is those, suppose 100 people were holding on to a particular stock, and I'm going to talk about a stock called Mastec. So, if 100 people are holding on to Mastec at 3,000, say 3,200 about 3 months back, now we are left with maybe 80 people holding on to it, 70 to 80, and probably 3 months down the line it would go down to around 40 people holding it, or 35 to 40. And that is exactly what this market wants. Lesser people, market getting lighter, and everybody running away from the market. Those who are left will make a lot of money, and that is exactly what happened in 2020. Those who invested from 17, 18, 19 or earlier and kept on investments and held on to their positions, even if they did not add on to their positions, made a lot of money. Same happened in 2016 when the fall happened in January and February, and many left because the market fell from 9100 to 6800. So it was pretty evident that we fell 23% in the index and about 35% on the broader markets, that everybody was running out in 2 months. And you need to understand one more thing, that in a bull market of 4 years, in a bull market that last 4 to 5 years, that lasted in 2003 to 7, we had at least three corrections which were more than 20%, nearly 30%. Here we have seen from 2014, if the bull market, if we take the bull market started in 2014, we have had one correction in 2016 in the Nifty. Even in 2018-19 fall, it was the mid caps that fell, and in 2020 we had a 40% correction. So we have had two corrections over the last 8 years. So in 4 years we have had three corrections of more than 20%. In 2003 to 7 cycle, in 2014 to 22 cycle, we have had only two major corrections. So there has to be a correction of more than 20% for this market to digest everything and move on and then make a new high. So what I feel is going to happen is we'll see 14,000. That means a correction, or 13,800. That means a clear correction of something like 25-26% on the index. That means a correction of say even 37-40% on the IT index. That means a correction of around 35, 32, 35% on the mid cap and small cap index. And that means a correction of 60 to 70% in most of the mid caps that we people are holding, and some of them 40 to 50%. So for example, Mastech, that the stock that I want to talk to you in detail, uh, made a high of 3660, currently at 2000, has fallen something like 50% already. Uh, I mean, nearly 50%, 45%. So this can very well go to 1800, 1700. Now, this is the major point I want to talk to you about. The best part here is that whatever you're seeing on the screen is notional losses, just like we had notional profits in October of 2021. If we can stay put for 12 to 18 months, this all should reverse, because valuations in most of the stocks will become very good, will become extremely good, will become much better. And you will see a situation where these stocks will fly at one point of time, and will catch up on their earnings, because the earnings will keep on growing. So coming to that earnings part, let's discuss about Mastech. So Mastech came out with an EPS of around 98 rupees for this year, and it's trading at 2000 rupees, nearly 20 times it is trading at current earnings, which have already come through. Next year, I think the earnings should expand to 123 rupees. I'm taking 25% CAGR growth. And the year after, the earnings grow, it should be 154 rupees. Now at 154 rupees for FY24, and if I'm looking at 18 months from now, if we are looking at 2040 rupees, which is the current price, at 154 rupees, it's trading at only 13.2 times. A company growing at 40% currently, I'm saying for the next 2 years it grows at 30%, not even 40%, although it has talked about better growth going forward, because there is a lot of order book, you can say, visibility that is available. But let's see if it grows on profitability front at 30%. Even then, 2 years hence, the valuations currently is only 13 times. And if you look at something like its market cap, so the market cap has now gone to 6,000 crores. And if you look at sales, the sales would be around 2,700 crores. So it's trading at 2.2 times sales. And going forward, if you look at profitability, current profitability has been nearly 300 crores. If we say 30% growth for the next 2 years, we'll see a profit of around 520 crores, and the market cap of the company is around 6,000 crores. So again, the stock is trading at under 12 times, you can say, profit to market cap. Even if you look at that, so the market cap is 6,000 crores. When you divide it by 520, it's around 11 and a half times. Now, if we look at TCS, although TCS is a completely different, you can say, beast in this IT industry, but that is the best we could look at. It's trading at 30 times its profit. And normally, mid caps IT stocks have traded at a premium to the large caps because of their growth. So TCS is growing at 18 to 20%. On the profitability front, Mastech is growing at 35-40%. And we have a situation where uh, the market cap is pretty less for this company, and it's a mid cap. It should be trading at slight premium to what TCS, Infosys, HCL Tech is doing. And if, because of this fact only, that people do get into mid caps and small caps, because they trade at premiums to them, although the overall market trades at a discount to the large caps in terms of earnings. So some of the mid caps which grow at 40-50% do trade at premium. So a stock growing at, say, even 30% should trade at something like 30 to 35 times earnings. Now, if we take 35 times earnings for 154 rupees, as I said, which should be the earnings for FY24, the target comes out to be is 5,400. At around 5,400, if we look at 2,100 of today, we are looking at an appreciation, huge appreciation. So we are looking at an appreciation of 2.5 times. This is exactly what my target is from an 18-month point of view, because then FY24 earnings will be visible. This is the kind of valuations, or this is the kind of attractive valuations that most stocks which are growing at 25-30% are trading at. They are trading at 20, 25, 15, 18, 13, 10 times earnings 2 year forward. So this can get worse from here. I'm not saying this will not, but it won't last long. What it means is that this will not last long. This may last for 1 month, 2 months, maybe 3 months, and then there will be a very decent rally for to come back to the norm, to come back to an equivalence where the market will behave very differently, where the market will behave where the market will behave pretty well. So in my opinion, one should, if they don't have the money, just stay put in the market, stay away from the market. If you are having stocks which are growing at 20% on the top line and 20% on the bottom line continuously, and it's trading at 20 times, you have a multi-bagger at your hand. You have a stock that could double over the next 2 years or so. So just keep holding on to them, and hopefully if they continue to produce the numbers that they are doing, the market will catch up once this reversal in the market takes place. So I hope that explains the point on most of the stocks, most of the good quality, top quality stocks, say a CN, say L&T Infotech, uh, you name it, there are many, Birlasoft, etc. They are all top quality companies which should perform very well going forwards. For example, a Birlasoft at 360, 330, 320 could go to 550 very easily once things normalize. So all this IT index, the IT index, the auto index, and most of the, you can say, consumer oriented companies have not been doing well even when the numbers have been good. So one thing is pretty sure, that going forward numbers should improve. Earnings are our best friends, and although markets may go down even further, 10% from here on the Nifty, 15, 18% on the mid and small cap, but eventually whenever the buying comes back, maybe in 3 to 4 months time, things will be much better. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help in growth channel. That will help you also ask me questions and eke out answers in greater detail. So LTTS, just like Larsen and Toubro Infotech, very positive on it from a 2 years point of view. If you have it, hold. If you don't have it and you have the money, you can average the uh, as far as NBCC is concerned, I think around 2930 is a strong support. Even if that gets broken, if you are holding on to the stock, do not sell. Although I'm not that gung ho on the real estate and infrastructure space, so both IRFC and NBCC are not my top picks now. With the kind of interest rate hikes that will take place, but whenever the rally comes, NBCC also should go to 42 to 45 levels, but that will take somewhere around a year to year and a half. See, the next 6 months could be extremely difficult for the overall market. I don't think the overall market will perform, but some of the stocks should do well. Sheila Foams is good. Again, one that could be accumulated from a 2 years perspective. BCL, I would prefer buying into larger mid caps, good quality mid cap consumer companies like Bata, etc. Uh, so that's the call there. Tasty Bite, again, a very good quality small cap company, but you have to be patient here. In fact, in companies which have very low float and very low, you can say, volumes, it's better to invest like a investor over 5 6 years rather than trade into it. So if you are an investor here, you need not worry, keep on accumulating. Hopefully in 4 to 5 years time it would turn out to be a multi-bagger. Similarly, I like even I like Kilpes at these levels, a stock that I hold at the moment. I like something like Loris Labs at these levels around 500 or so. Uh, I like many of the, you can say, mid-cap IT names that I've talked about. Mid-cap pharma look good. Divi's Lab also look good. So take for instance the 50 60 companies that are growing between 25 to 50% yearly. Their valuations have become cheaper. Something like a DMart around 3000 is very interesting if it comes to 3500, 3300. Something like a Dixon around 2000, 2200 would look interesting. Dixon has an issue with the kind of margins they produce. So I would prefer buying it closer to 2000, 2300, 2200 rather than at these levels. So these are the facts at the moment, that the stocks may fall. Currently something like a Polycab also looks good. So rather than you ask me questions, I'm just giving you examples. Polycab around 2000 looks very interesting. Astral around 1400, 1500 will look very interesting. So these you can say values should come in these stocks over the next 3 months, and that's where one should grab them. going forward. Asian Paints around 2400, 2300. No matter what is happening, is very, very interesting. Again, I'm invested into Asian Paints and Pidilite. Pidilite around 1800, 1900. Acrysil around 500, 450. Very good to buy. Again, a company that could become 3, 4x going forward in the next 2 to 3 years. Santosh, thanks for your contribution. See, SHIL, one can add below 300, any level below 300, 280, 290 could be very good levels to buy some. But I would not suggest you for averaging any stock at the moment. So that is the thing. People do not have the money, and those who have, I would say, wait for the reversal in the market to take place, because you never know. You buy an SHIL at 280, it goes to 220. So that is the point. So basically, wait it out, let the market reverse. It's better to average SHIL going up at 350, 360, rather than averaging at 290 and seeing it go to 230 if the market falls terribly. Again, 70, I don't know. But it's a stock I'm holding. So it's better not to average. I don't think that it is good to average at these levels or at any level, unless the market completely reverses and all this, you can say, fall is over. So wait for that. All right. See, Sequence Scientific, let's wait for the results. The margins have dipped sharply over the last 2 years. Let's wait for June quarter results and then take a call on it. If the results are good, the management is good. The management, there's no issue with the management, but there has been a lot of retail and FII selling that has been taking place. 86 is where Carlyle has bought. That seems like a good support. So I think what you need to do is just leave it, don't add. If you don't have it, then you can add. I mean, these levels are very good, but if you have it at higher levels, don't add, don't do anything. See, Clean Science is also a top class company and has come back to very good levels. But again, what I say is that you buy some here at 20-25% of total buying you can do now. A rest you can do later on. So not quite that you go ahead and buy now. So my whole thesis is that this market is ready for further down move, at least 10% more. And then probably you can definitely look at buying big. So again, a happiest mind around 800, 750 would be good levels to get into. If you have bought at higher levels, just hold on to the stock. It will do well over the next 2 years. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. And kindly do support me on Patreon. Thank you.